Hey everyone, welcome back to the channel. Now let me guess. You've heard of day trading before, right? You've seen those people in the movies, maybe even on social media, making quick profits, buying and selling stocks in the blink of an eye. You might think, hey, that looks awesome, but is it really that easy? Or is there more to it than just pressing a few buttons and watching the money roll in? Well, you've come to the right place, because today, we're diving into day trading. What it is, how it works, and everything you need to know before you dive into those fast-moving stock charts. But before we get into the nitty-gritty, let's make sure you don't end up like those people who see day trading like a get-rich-quick scheme. Because trust me, it's not. It takes more than just wishful thinking and clicking buttons on your phone. So grab a cup of coffee, sit back, and let's break down how you can get started with day trading and actually make it work for you. Hit that like button, and don't forget to subscribe so you don't miss any future tips to level up your financial game. Alright, let's get down to the basics. What exactly is day trading? At its core, day trading is all about buying and selling financial instruments like stocks, options, or even cryptocurrencies within the same trading day. That means you open and close your trades all in one day with no overnight positions. So, for example, you might buy some shares of a stock at 9:30 a.m., sell them by 1 p.m., and hopefully make a profit in between. The goal? To take advantage of the small price movements that happen throughout the day. Think of it like surfing the market waves. You ride the wave, cash out before it crashes, and you're back on the shore before the market closes. Sounds simple, right? Well, in theory, maybe. But let's be real, it takes a lot more skill and strategy than just hopping on a stock and hoping for the best. Day trading is a full-time job. For real. It requires you to watch the markets like a hawk, make decisions on the fly, and stay alert all day long. There's no time to nap, no time to check your Instagram, just pure focus on the charts and trends. Now that you know what day trading is, let's talk about some key principles that you need to understand before you even think about jumping in. First up, volatility. The key to making money in day trading is to find volatile stocks. Volatility means the stock is moving up and down, creating the opportunities you need to buy low and sell high within the same day. But here's the thing. You don't want it to be so volatile that you're getting whiplash. Think of it like a roller coaster ride. You want a fun one, not one that makes you lose your lunch. Second principle, liquidity. You need to make sure the stock or asset you're trading is liquid. This just means there's enough volume being traded so that you can easily enter and exit trades without a problem. If a stock has low liquidity, you could be stuck holding the bag when it's time to sell, and that's not what you want. So make sure you're trading stocks that are popular, with a lot of daily volume, stocks that are actively traded. Third principle, timing. Timing is everything in day trading. You need to know when to enter and know when to exit. You don't want to be the last one to leave the party when the stock starts dropping. Trust me, you'll regret it. Timing doesn't just mean entering at the right price. It also means managing your trades. That's where things like stop-loss orders and limit orders come in, which we'll talk about in a minute. Let's be honest, day trading is like being a ninja in the stock market. You need to be fast, precise, and always 2 steps ahead of the game. So, you know what day trading is and the principles that govern it. But now the question is, what do you need to get started? Is it just your phone and a couple of fancy apps? Not quite. There are a few essential tools every beginner day trader should have to give themselves a fighting chance. First, you need a brokerage account. This is where you'll deposit your funds and make all your trades. Popular brokers like TD Ameritrade, E-Trade, and Robinhood all offer platforms where you can day trade, though you'll want to make sure you're picking one that has low fees and good access to real-time data. Think of your brokerage as your vehicle. You need a smooth ride to get where you're going, not something that'll break down in the middle of the market highway. Next, let's talk about charting software. You'll need to study charts and indicators to spot trends and price movements. Some brokers have built-in charting tools, but you might also want to invest in software like TradingView or Thinkorswim for advanced features and flexibility. Picture this like a GPS for your trading. You don't want to get lost in the market and end up somewhere you don't want to be. Finally, you'll need to know how to analyze the markets. This could mean reading financial news, watching live news feeds, or following technical indicators like moving averages or relative strength index, RSI. It's like having a cheat sheet, but you need to know how to read it. So you've got your tools and you understand the basics of day trading. Now let's talk about some strategies to actually make it work. Remember, day trading isn't about picking random stocks and hoping you get lucky. You need a plan. One strategy is called the momentum trading strategy. This is where you ride the momentum of stocks that are moving sharply in one direction, either up or down. You buy when the price is moving up, then sell when the price starts to show signs of weakening. Another strategy is scalping. This is where you make small, quick profits by buying and selling within a short period, sometimes even minutes. It's like taking little bites of the market throughout the day, rather than waiting for a huge chunk of profit. Think of scalping like being the guy who gets the free sample at Costco and eats all of them without buying anything. You're in and out, quick and painless. Lastly, you can use a strategy called reversal trading. This is where you spot a stock that's been on a consistent trend and look for signs that it might reverse. If you can catch the reversal early, you can ride it for a nice profit. So, now you know the basics of day trading and the strategies to use. But let's take a minute to talk about common mistakes that can easily trip up beginners. First of all, don't let emotions drive your decisions. If you're chasing after the next big win or trying to revenge trade after a loss, you're setting yourself up for failure. Second, don't risk more than you can afford to lose. Day trading can be risky, and if you're not careful, you could lose a lot of money. It's important to set stop-loss orders to limit your losses if the trade doesn't go your way. And please, for the love of your wallet, don't skip your research. Just because you saw a meme on Twitter saying, "This stock's gonna moon," doesn't mean you should buy it. Lastly, avoid overtrading. If you're trading too much, you'll get burnt out. Keep it disciplined and stick to a strategy. And that's a wrap on day trading for beginners. You now have a solid foundation of what day trading is, how it works, and how to avoid common pitfalls. Got any questions? Drop them in the comments below. And if you found this video helpful, don't forget to like, subscribe, and share it with anyone who wants to get into day trading. Remember, it's not about making fast money. It's about making smart decisions and staying disciplined. Keep learning, keep practicing, and soon, you'll be trading like a pro. Thanks for watching, and I'll catch you next time with more tips to help you level up your trading game.